Hello and welcome to our market alert video for today, which is May 3, 2024. I hope this video reaches you in good spirits and that you are healthy, wealthy, and wise. I am Ken Moraif. I'm the CEO and founder of Retirement Planners of America, and we are a firm that specializes in, I think, the most wonderful thing, and that is the creation of SCWPS. And if you don't know what a SCWPS is, that is the acronym for Second Childhood Without Parental Supervision. When our clients retire, we call them a SCWPS. We want them to go play, have fun, be a kid again, and let us worry about all this boring financial stuff for you so that you don't have to. So we got the jobs numbers in this morning, and they came in bad. And yet the market went up a lot, and the bond market loved it. Why? Well, because the concern was that the inflation numbers that we were getting were showing that inflation was not coming down and that the economy was strong, and maybe the Fed was even going to have to now raise interest rates when before the bias was towards them lowering interest rates. And if they did that, then, Katie barred the door and all these terrible things would happen. Well, the jobs numbers came in significantly lower than what was expected, and that took all that concern off the table. So now the talk is, yes, they are going to lower interest rates this year after all, when before we were kind of leaning towards they were going to have to raise them. So it's like this schizophrenic market where every time there's a new set of news, the market reacts completely opposite to what it did to the previous news. So it's almost comical at how whipsaw the market and investors, their emotions are with every new data point. And in our view, the reason is because the Fed is also not leading the way. They're reacting. And if they're reacting to data, then so are the investors. So everybody's reacting to whatever the data is that comes out. So our job here for you is to smooth that all out and kind of give you a longer term perspective than the day-to-day, and hopefully help you in that regard. So what do we view? Well, our view has been that there would be no rate hikes before July, and that seems to be an appropriate thing, even though many thought there would be 7 of them starting in March, and that hasn't happened, as we now know. So we also did not think the Fed was going to raise interest rates. That we did not feel was on the table at all, particularly since the Fed told us they're going to lower 3 times this year, and now they raise them. They lose all credibility if they do that. So that would be just not even possible from that standpoint in our view. So where do we sit? The economy is slowing down, it appears. Jobs had a significant miss this morning, as I just said. If that's the case, then the inflationary pressures look like they're abating. The Federal Reserve having interest rates this high is starting to take effect, and that therefore should be good on the front of interest rates continuing to rise, big bad recession coming, and all these terrible things. Profits appear to be holding. We're in the middle of profit season, and there are no downside bad surprises to speak of. So overall, the picture looks pretty healthy. And as we view it, we think that by the end of this year, both the stock market and the bond market should be significantly higher than they are today. So we view any downside movements in the market as buying opportunities right now. Now, having said that, we always believe that you plan for the worst and you hope for the best, not you plan for the best and hope the worst doesn't happen. We don't think that's very prudent. We work with people who are over 50, who are retired or retiring soon. And so therefore, we always believe that you should have a sell strategy. You should have a strategy to protect yourself. So we have a strategy we call invest and protect. And currently we are not near our sell signal, but should we reach it, we will be telling our clients to get out and go into cash, just as we did in November of 2007, before the stock market crash of 2008, just as we did the day before the pandemic was announced, and also in 2022 with all this inflation stuff, and the market went down significantly after that. So our job, we believe that growth is important, but protection of principal is even more important. And that's because we work with people who are over 50, retired, or retiring soon. So if that's you, we believe you should have a strategy to protect on the downside. Buy and hold, we think, is insufficient. So right now, even though we do have a very positive outlook, we take great deal of peace of mind and solace in the fact that we do have a strategy that if we're wrong, which is possible, certainly, I know you have a hard time believing that, but it's possible. And if we are wrong, we want to at least have a strategy to address that to the best way possible. So that's where we are. Make sure you have a strategy on the downside to protect, but right now we are fully invested and we're very optimistic about our bond side and our stock side. So share this video with as many of your friends as you possibly can. Visit with us. Hopefully we can turn you into a squipper, or if you're a squipper already, maybe we can talk about how to keep you a squipper. Keep you retired. We don't want anybody to have to unretire. So thank you for watching, and we'll talk soon.